Hi, I'm Sachin Relekar and I will be taking you through the market recap of the month, triggers for the market movement in the coming month, growth outlook for consumption sector and investment opportunities for investors. The first half of the year closed on a strong note with the mid cap and small cap outperforming the large cap indices. The key indices touched lifetime highs, Sensex nears 80,000, Nifty 50 crosses 24,000. After the initial bout of volatility on the day of election results, Indian equities rose remarkably in June, sustained by encouraging economic data, robust flows, optimism around new government's upcoming budget. Notably, India has achieved another landmark by surpassing $5 trillion in market capitalization, with last 1 trillion being added in a span of just 6 months. With markets at all-time highs, sentiment remains both cautious and optimistic at the same time. Equity market valuations are higher, particularly in investment part of the economy. As with the strong gains seen, we do expect normalization in the near term. Now let's understand what triggers for the market are to move forward. What should investors do? How they should approach these markets? A full-fledged union budget and the government 100-day plan will likely set the tone for the market. July also marks the start of quarterly earnings season. Last few quarters have seen earning upgrades and one needs to be watchful to see if these upgrades can continue. We expect consumption to pick up in coming months. Overall, India remains one of the fastest growing economies globally. Macros remain strong with an easing inflation cycle, progress of monsoons and robust economic growth. We expect consumption to pick up going forward and there are green shoots in the rural segment. In addition, a pickup in capex could likely to create more jobs, thereby boost spending power, helping consumption growth. The premiumization theme continues and the beneficiaries are various segments within the consumer discretionary. Specifically, automobiles, real estate and high-end retail have been doing well. The housing sector is seeing increasing absorption pan-India, and with government's focus on affordable housing, building materials and ancillaries across the spectrum may help. We retain our overweight stance in these sectors. This brings us to some of the investment opportunities for investors. With the turnaround in the capex and a revival in government spending, the entire curve of the capex cycle may benefit in the light of multiple enablers such as deleveraged corporate balance sheets, healthy profitability, rising domestic demand, and increasing capacity utilization. Accordingly, we are overweight on infrastructure, manufacturing, and utilities and transportation. We maintain a bias to holding in sectors that can benefit from government policies such as energy, defense and power, etc. Banking sector could gain from decadal low NPAs, better capital ratios and surge in credit demand. Conversely, we have an underweight in export-oriented segment, attributing this to decline in global economic growth. Having said all of this, my advice to investors is follow an asset allocation approach to investing based on your goals, investment horizon, and risk profile with a long-term view. Watch out this space every month for equity outlook from Axis Mutual Fund.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.